more stocks in a bit from now, but Pramod Gubbi is a market master of the day. He's co-founder at Marcellus Investment Managers. Pramod, great to have you with us here on the program. Thank you very much. Slowly but surely, the index is heading to new highs, Pramod. How are things looking overall? And from the last time that we spoke, are there any sort of big portfolio ins and outs that you've made?
Thanks for having me here. Always a pleasure. Yeah, so from a macro perspective, I think we've been talking about how India is standing out in the global situation, both from a capital flows as well as FDI flows perspective. Partly because some of our own fundamentals are stacking up pretty well. At the same time, because of various geopolitical issues, India is seen as the most favored market and economy to invest in. Because of that, I think the flows this month are pretty much in line with the rest of the emerging markets back. We are not seeing a significant shift towards India yet. Perhaps that's a 2023 story. But like I said, it's not just the capital flows. Even on the FDI side, you should expect significant investments coming in. So that's the brief on the macro side. From our perspective, like we've always discussed, Prashant, we don't change much too often. So I think since the time we spoke last, I don't think we've added nor exited anything of note. But the theme remains the same. We still wary about inflationary pressures coming in, although across commodities there's been some cooling off. But given the geopolitical situation globally, we reckon one should be prepared with companies in the portfolio which have pricing power, which are able to withstand a pretty impressive, I think,
Okay, all right. Hi, Pramod. Good morning. Nigel on this side. But do you think we're running ahead of ourselves on the headline index itself? The challenges still persist, maybe on the trade deficit front and valuation-wise as well. But what's your take?
No, absolutely. I think if there's one concern from a macro perspective, it is around current account and the fiscal deficit as well. And both are related to the commodity price inflation, which is why I stack that up as the most important risk that investors need to look at, whether you're a macro investor or a bottom-up investor. That's one thing that beyond anybody's control. You have the war situation persisting, so that's adding forces. Potentially a China opening up, although it looks unlikely now that the cases have gone up. There could be more stringent lockdown, but if China opens up, that will create its own demand pressures on commodities and prices could go up. So you're absolutely right. If there's one sort of dark cloud on the horizon for the India macro story, it is the current account and the fiscal deficit dealt by commodity prices. Valuations we are less fussed about. Clearly India's superior valuations to other emerging markets are justified by the better quality companies in the Indian index. Return on capital simply is significantly greater than the ROCE for other peers there. And speaking to Western allocators, we do sense that they do recognize. Of course, there is a school of thought which says that, look, despite all the problems in China, China is extremely cheap. It's in the price, but I think there are longer-term perspectives being built where India is considered as a more stabler economy, more stabler market to invest in from a private capital perspective. And that flow will come in irrespective of the valuations. I think people will see through the headline price to earnings multiple. But more than the valuation, I would think the commodity price inflation is a bigger risk for the India story.
All right. Just a few other names, Pramod, stay with us. Just coming to you, look at Paytm. It's coming up about 3.5%, 456 on Paytm. And looking up, there is PNB, Punjab National Bank, which is now the top volume-led gainer. It's up 2.75%. IRFC, the railway finance company, 3% higher, 32 on that one. RVNL is up 3%. So there's, some of these themes are continuing. Escorts is up 3.5% plus now on decent-sized volumes. There is RBL Bank, which is starting about 3% higher. Timken, which had a pretty good run a few days ago, that's up 4%. at this point. There is UTI AMC. I mean, I've not seen this on the top gainers board for a while, but that's starting 6% higher. Is the cheapest asset management company, of course. CET is up about 4%. So, I mean, there is a fair bit. Nigel already mentioned ITDC, which, of course, continues to be up and about. Market breadth is pretty decent. Not quite 3:1, but close. And that's the lay of the land. 25-26 points lower, though, on the Nifty at this stage. Pramod, have you or your team given these new economy names a look? Because stocks are down, in some cases, 70-75%. I mean, 0.25% of the value they started out with, life as listed entities.
Yeah, I mean, we have looked, we do look at every opportunity that comes our way. Other than maybe one, we haven't been particularly impressed, more from a fundamental perspective. Valuations aside, valuations will come to later, but from a sustainable competitive advantage perspective, there aren't that many that appeal to us. The only one that we've gotten close to looking at is Nykaa, where we do think that it's fundamentally a good business. It has been built not just from funding from venture capital. In fact, a lot of it has been built with very little capital infusion, which appeals to us, where you build a business which can generate lots of profits, which can in turn fund its expansion. Having said that, we're still not comfortable on the valuation front, but that's the only exception which has been on our radar from the new age companies.
Pramod, you mentioned Nykaa, that you'll have got close to looking at it at least. What about Zomato? They're gaining market share from Swiggy, a couple of reports indicated, and maybe that pricing war is ending, so then profitability will slowly start showing up. You haven't looked at that?
Not really. It hasn't passed our filters. Like I said, we need capital efficiency. We need to show that unit economics are derived without funding. So, which is why Nykaa stands out. It is not a loss-making story, much like the others. We need to see a fairly long enough period where businesses can sustain without having to fund operating losses, because that's foremost as part of our investment philosophy. It could appeal to other investors, but for us, we need a reasonable amount of cash generation in the business, and show that the business can grow through internal accruals without having to dilute through external infusions, which obviously is detrimental to minority shareholders. That's where I don't think Zomato has passed the screen at our front.
Okay, it's not past the screen. Okay, fair enough. By the way, on Nykaa, Pramod, do you already own the name?
No, we don't own Nykaa yet.
But you said you got
so
close.
Like I said,
you got close to kind of the closest, which kind of fits something you may want to buy.
Like I said, we have a set of screeners. Okay. We do need that cash generation. That's the only one amongst the new age IPOs which is past that. But there's a lot more work to be done. Like I said, valuations are still not comfortable. You do need to get comfort that the business can grow at healthy pace for long periods of time. The business has had a very short period of history, not more than a decade. So we'll perhaps observe it for a longer period before we get to that stage.
All right, Pramod, requesting you to just stay with us for a couple of minutes. We're coming right back to you. Santosh Nair as well joins us in the studio. Take us through the timeline issue with bonus shares and what market players have to say about this. Well, Santosh, you're tracking a couple of these companies who have been in the news as well. Tell us more.
Well, right now there's some kind of ambiguity in the wording of the rule as far as the credit of bonus shares to the shareholders' demat accounts go. Most companies typically tend to do that within 15 days, but again it varies between companies to companies. In some cases, even the credit of bonus shares have gone beyond 15 days. So typically what happens is that it sometimes creates a window of opportunity to some people to put up the price simply because there's no floating stock in the market at that point in time. The shareholders are still to receive that bonus shares, and because of which it does happen. I'm not saying it happens for all the companies, but there are definitely companies which try to capitalize on this and try and mark up the prices of their shares.
Okay, so the regulator is looking into it, is it?
Well, market players have been saying that there should be a certain cutoff date, in the sense that there should be a fixed rule. You should credit the shares within a certain number of days. There's no reason why it should take 15 days. So if you say for something like even as complex as an IPO, the shares are credited within 10 days. So in bonus shares, why not? Already the company has a list of all the shareholders, and they should be able to do that quickly enough.
And is this, Santosh, based off any particular event or anything that they're looking at it? And should we, are we to expect something soon from the regulator?
Well, the matter is under consideration because there have been at least quite a few traders that we've been speaking to have been saying that, that there are sharp price swings as soon as the bonus issue is announced, typically in the days following the record date when there is very low liquidity. And since they don't know, they don't have any clear idea of when the shares are going to get credited, they can't even probably even hedge their position. This now it's a free market at the end of the day, but there is definitely an asymmetry here due to the ambiguity in rules.
Okay, all right, Santosh, thanks a lot for stopping by and giving us that quick update. We'll wait by to see whether or not something is done about that and clear out these loose ends as well. But Pramod, thanks for waiting by. Coming back to you, you know, the consensus trade this year has been banks. The FIs, they were selling at one point of time and they were knocking back these banking names. You have liked a couple of these banking names, and I think you've been leaning towards the private financials and private banks. What about the PSUs? They have been the space where the big money has been made. Valuations not a reason enough for you to buy them?
Well, so like I said, one part of our investment philosophy is to look at long track records in history, right? And the PSU banks sort of fall short on that front. Now, it could be changing going forward. There could be a new story written by PSU banks, in which case we're happy to wait. We're happy to wait to see that there are structural changes in the PSU banking structure, that the problems of the past won't recur. If there's enough proof, and remember, we haven't seen the beginnings of a credit cycle yet. We need to see an entirety of the credit cycle to see prudence in terms of lending quality, and that figuring out when the economic cycle turns downwards, do you then see a shoot up in terms of NPAs? So we'd be more than happy to be proven wrong, but we'd like to see that one full cycle before we change our minds on PSU banks.
All right, we'll leave it there, Pramod. Thank you very much for your time. Great speaking with you as always here on the program. Appreciate it very much. I mean, the market is absolutely flat, 8 points. I mean, neither here nor there. 18,477 is where the index is at. And we've been highlighting sort of stocks and sectors which are moving around today. Paytm, PNB, the railway stocks, Escorts. I mean, this list has not changed. Maybe we can put up Max Health, which is a new one which has come into the mix. It's up 3%. That's the hospital chain. We've got Indian Overseas Bank. You've got a bunch of these PSU banks which are coming, which are sort of starting to fire as well on the upside. Market breadth is still pretty positive. I mean, you know, overall, all said and done. Bajaj Finance on the downside with volumes. Power Grid, all just 1%, 1.25% cuts. Asian Paints, Cipla, and Adani Transmission, and Adani Green. These are stocks which are lower at this point. Still early days. I mean, just what, the first 15 minutes or so of trade. Now, Dixon Tech stock is down around 20% this year. How is the business environment looking? The last, when we had spoken with the management, they had, of course, expressed concerns about the overall rate of growth which the market was expecting, perhaps, which needed to be brought down a little bit.